Hi there, Coach Julien here. Today's video I'm going to cover 4 high growth pillar investments. By pillar I mean investments that are critical and key to your portfolio. They're not speculative, they're not short term. These pillar investments hold up your portfolio. They're part of the core of your portfolio, and this core is high growth. So in the portfolio you can have different types of investments, and if you're looking for something high growth, these are investments that you need to take a look at, that you should consider. So I'm going to go through these in the video, so stay tuned. Hi Canadians, I'm Julien, Regoli, CPA, CMA, your finance coach. I firmly believe that you don't need to be a math whiz, you don't need a finance degree, you don't need to delegate all your portfolio and your financial matters to some unknown person who bases their investment recommendations on who knows what type of commission structure. I firmly believe that you can do it on your own with some coaching. All you need is to learn a few things, a few key concepts, and have the discipline to apply them, and you could be well on your way to financial freedom. My channel talks about 3 main things. 1 is investing money, 2 is how to save money, 3 is how to think about money. So if this kind of topic interests you, then sign up to my channel, hit the bell button, and you'll be notified whenever I upload new content. Thanks for watching. So here you go. The first one is VTV. And by the way, for some of you who have followed me, I've covered some of these in my previous videos. The first one is Vanguard Value ETF, VTV. This is a US dollar ETF. This one, as you can see, has beautiful growth over 3, 5, 10 years. Very consistent performance, very well diversified. I like the expense ratio, 0.04%. So that's what it costs to manage this fund. Very low. Total assets under management over $88 billion. And it even gives you a dividend. Look at that, 2.12%. Now, today we're looking at growth investments. And so the focus is not dividend yield. Growth investments have nice price appreciation potential and less dividend distribution. That's a general characteristic of growth investments. This ETF tracks the performance of the CRSP US Large Cap Value Index. Obviously, most of this is invested in stocks. You can see that the distribution, so it's really well diversified. The highest weight is 2.91% in JP Morgan. And if we look at the holdings in more detail, you can see that it's invested in 356 companies. You can see JP Morgan, Berkshire, Johnson & Johnson. So these are huge businesses, generate lots of money, value. Okay, so that's what you're getting with this kind of investment. The second one is VOO, one of the largest S&P 500 ETFs. Basically follows the index, real pure play. Look at that, the expense ratio is even lower than the other one. It's 0.03%, so super low cost. Total assets under management over $268 billion. Even has a little dividend here, 1.25. Again, that's not the focus, but still, this is nice to have. As you can see, over 10 years, beautiful, beautiful growth. Look at that, over 5 years, over 3 years. Also, so just a great investment to hold. This is a pillar investment. It's kind of investment you buy and you forget about. Okay, all of these that I'm going to cover today, these are investments you buy and you kind of forget about them because they're so solid, so diversified. If we look at what's in here, we have 510 stocks, so very well diversified, highly recommended. The next one is an even more aggressive ETF called Vanguard Growth. The ticker is VUG. Again, it's US dollar denominated investment. Expense ratio, very low, 0.04%. Over $88 billion of assets under management. A little bit of a dividend yield. The investment seeks to track the performance of the CRSP US Large Cap Growth Index. We'll take a look at where it's invested. It's invested in 287 stocks, so a little bit less diversified than the previous two. Like we saw the VOO at over 500 companies, and VTV was somewhere in the 350 company range, so less diversified, more focused, high growth approach to VUG. And wait till the end, because I'm going to compare all of these to show you how they've performed historically. The next one is even more aggressive, and this one follows the NASDAQ 100 index, expense ratio of 0.2%. Total assets under management, look at that, over $200 billion. And there is some dividend if we look at the main components of this. So it's invested in 102 companies. So if we compare all of these, I like to compare them over time. Over a year, you can see there's not a huge difference over a year. The lowest one is VTV at 42, almost 43%, and the best performing one is QQQ at 44.6%. So not a huge difference over a year, but as you extend the time frame, you could see that these returns are spreading out, and clearly QQQ is performing way better than VTV. The second best is VUG, and then the third best, which follows the S&P 500, is 77.61% over 3 years. So that's total return over 3 years. And as we extend the period, you could see that the spread between the top performer and the lowest performing one is greater. 10 years, look at that, over 650% for QQQ versus 268% for VTV. You'll notice that all of these are US economy investments. What I like to do is to add the TSX, the Toronto Stock Exchange Index. You could see that it really lags behind significantly. The S&P 500 is almost triple that of the TSX total return. You can see that the US economy indexes have performed much better than the Canadian index. You should definitely have some US economy investments in your portfolio. I'm a big proponent of ETFs. They're diversified, they're low cost, they're transparent, they're very liquid, and I'll flash up a video that I made that compares ETFs versus mutual funds. Make sure to take a look at that. Also, make sure to take a look at my lazy portfolio strategy. I hope you liked this video. If you did like it, make sure to give me a thumbs up. If you're interested in a one-on-one consultation with me, you'll find a link to my Calendly in the description of the video below. If you're debating what kind of investment, you want to buy this ETF, you want to buy this mutual fund, you want to buy this stock versus that stock, should you contribute to your RESP, should you contribute to your RRSP, TFSA, should you pay down the mortgage, or should you pay down credit card debt? All those kinds of financial questions, I'd be happy to speak with you. The first half hour is free, so take advantage of it, and make sure to subscribe to my channel and hit the bell button. You'll be notified whenever I upload new content. Guys, thanks for watching, and we'll see you real soon.